I don't really lose sleep over my own properties. I'm like, if they don't perform and, I don't get the best return, or if I lost, I would much rather lose my own money than, but once you start taking other people's money, it is a big responsibility. But it is concerning how many people come to me. You were kind of hitting on this, but like older people that have these massive stock portfolios, but wealth and have paid wealth managers millions of dollars.
Hi, this is Dr. Cynthia Tant with Sip, Sell, Repeat in Real Estate. I'm here in Pensacola, Florida, and I have the honor today to speak with, interview, whatever we want to call it, Lauren Rogers. And she's from the Washington State area, completely opposite of where I'm at. Lauren, I'll tell you what, instead of me kind of reading off what I have, tell us a little bit about yourself and what we can do here to share some ideas and some great, your background is very interesting to the group here.
Sure. Yeah, I would love to. And thank you for having me on. First of all, I appreciate it. My name is Lauren Rogers. I am a principal at Veritas Equity Partners, a firm that I co-founded coming up on 3 years ago now. And my background
Nice.
is a bit unique in that I didn't come up in real estate. I actually have a background in tech. I am from the Seattle area, hence working for
Mm.
Amazon, Salesforce, that whole ecosystem and world, and then switched into workforce housing, which we can kind of get into how that all
Oh
transpired.
yeah,
But
exciting.
yeah, it's hopefully I can shed a little light on our region for your listeners, as we don't have as many investors from Florida or from the East Coast because I think they might perceive us as a bunch of crazy liberals or something, but I like to talk about why blue states can be good from an apartment investing standpoint in our niche in our market. So we are hyper focused on buying apartment buildings in Washington State and in specific areas of Washington State, and we can get into all of that. But that's kind of me in a nutshell.
Well, that's very unique because I know I haven't talked to many people about your specific niche. And I think that from an educational standpoint and also from the realtor perspective or the investor perspective, so I know I don't have a lot of people from the West Coast, California, and everything investing over in our area. Once they find out, though, that you can actually make a profit over here because we're so cheap compared to the West Coast, they get into it and they start getting into looking at what we have over here. But tell us a little bit about the workforce. What was that term that you used?
Yeah, workforce housing. So we are defined it as workforce housing because we're not taking government subsidies or anything of that nature. We just define our tenant base as anyone making between six, roughly like I would say 40 and 80,000 a year per family. So it's blue collar workers, a great tenant base of people that are hard workers that care about their credit and they care about their rental history because the reality is they're pretty much going to be forever renters because of the cost of housing in our region. So that's part of our investment thesis is it's very expensive to buy here. A starter house is almost $1 million. We're buying right outside of Seattle, so we don't buy in Seattle proper because of one, the deals pencil just as good in Snohomish and Pierce County, often even better. And then we're avoiding some of the landlord difficulties that people think about when they think of, Seattle or Oregon or California. So not pretending those don't exist, but I think it's important to note that every county is different. So Seattle has certain, King County and Seattle specific have certain laws that don't apply to some of our properties and just make it easier, if we have problems with tenants. But also, I would say our tenants tend to be really wonderful, hardworking people that, like I said, they care about their home, they care about their rental history because they're going to continue renting, for a long, long time. So Yeah, that's when I say workforce, it's more just kind of defining our rental base as opposed to, yeah, like we don't do Section 8 or anything. We do have some tenants, but that's not our wheelhouse, or our specialty. It's more of just kind of working class blue collar tenants.
Well, how did that transition from Amazon and the tech world get into an acquisition type of company and co-founding it? What was that interest or drive or, hey, I'm going to do this? There had to be something organization. Although I got into real estate after being a college professor and just investing, never had thought that was going to happen. But anyways, how did that all evolve for you?
Yeah, it was quite random to be honest. I was getting awfully tired of having to sell stock in order to that's kind of how we're paid, right? In the tech industry, like typically you get a base salary and then you get stock and then you sell the stock, to live because that's just how it's structured. So I was paying a lot in taxes and starting to think about, hey, I have this big stock portfolio, but it doesn't pay me and I can't really do anything with it. So yeah, it's great, I guess, for net worth when I log into my account, but
Mhm.
what's the point of this, if every time I need to use it for something, I'm getting hit with these big tax bills? And so it was an investment strategy. I started looking into real estate, listening to
Okay.
probably Too Much Bigger Pockets and thinking that I was
Mhm.
like going to be this real estate investor. And a mutual friend was like, hey, before you go sell all your stock and put it in this duplex, maybe you should meet with someone who knows about real estate. And I was
Mhm.
like, that's a great idea. I'm old enough now to, be like, yes, I would heed that advice. I would like to talk to an expert, hence getting connected to my business partner, Alex Birch. And he had been buying apartment buildings on the side for 15 years, had built up a really impressive real estate portfolio that he was living off of. It was kind of in that middle ground of still needing to work, but enough, enough cash flow coming in that he had the flexibility of saying, hey, maybe I don't want to stay in corporate. Maybe I want to go do something else. And so it was just a total timing thing where around the time I met him, I thought we were talking about a personal investment for me. I was going to have him just help me underwrite a deal and figure out, where I should put my personal cash. And then it turned into, why don't we actually start a company together and you can, recruit. Essentially, I started out as investor relations, talking to my tech network and trying
Oh
to
yeah.
raise capital. That was
Mhm.
my role. And he was very generous in offering me half of the company, which I didn't expect, but it was also, I was leaving a successful tech career, a
Right.
lot of money on the table. So I was like, hey, I understand you're not going to be able to pay me match what I'm making, but in terms of, the long term, it needs to be fair. And so it was more than fair for me. And that's kind of how it began. Was I was in an investor relations role and then just really thinking I was going to learn the business from him. And I didn't know it would turn out to be such a, perfect partnership. In marriage, if you will, like that now I'm like, okay, we will obviously continue as one, working for Veritas long term. But my initial thought was like, I can just gain knowledge from someone who's been doing this for a long
Oh
time.
wow. That's fantastic. Also, so like your focus is apartments though. Apartments only? Is that what it is?
It is,
And
yeah.
and so in the smaller the rural counties, or they're just outside of Seattle as
Just
far
outside,
as
we do have some stuff in Eastern Washington, so we pick those off opportunistically. We transacted out of Seattle into Eastern Washington starting probably 6 years ago. And that just happened to be really good timing for when the market in Eastern Washington really accelerated. We're less, we'll still underwrite deals there, but we're less focused on buying in the more rural areas, you could say, and focused on Snohomish County, Pierce County. So still very much city living, kind of think 20 minutes outside of Seattle.
Okay. So basically the blue collar worker that's supporting the city, the infrastructure of the tech business, more or less. That's because they can't afford to live closer to Seattle. And it's still maybe it's not a misconception. It's the conception of us that it is just tech over there and the $1 million, $25 million houses and stuff that the tech officers and people live in. I'm sure that's what it is. I mean, I know there's others that aren't like that, of course, but that's the conception that I get from being way over here on
Hmm.
the other side of the
I
country.
mean, the reality is a big, a big part of our market and economy is tech. So you're not wrong.
Mhm.
Like, certainly a lot of our workers are supporting Amazon, Microsoft, Google, Meta, the list, all the new AI companies that are
Oh
here.
God. Yeah.
That's true, but I think people don't realize we also have Starbucks and Boeing and a lot of other,
Oh.
companies as well that have blue collar workers that are not just tech. So we have a huge healthcare industry that's growing. So a lot more than just Amazon and Microsoft and the companies you hear about. But yes, our workers are exactly what you said. They're supporting those, the economy of the people that live downtown Seattle, and they tend to have to live, a little bit farther out, but they're commuting into the city or they're going, we have properties in Everett where Boeing is, properties in
Mm.
Pierce County and Tacoma. So, supporting a variety of industries.
That's very interesting. And I know that you said something about investing in a blue state that could be good. I live in a red state, unfortunately, but how do you see that? Because I have lots of friends in California that are thinking of investing over here from a price perspective. But tell me a little bit about what that mindset is of coming to a blue area.
Yeah, yeah. I think the biggest thing to think about specific to apartments is a lack of supply. So people kind of all flooded to the Sun Belt, right? Invested in
Mhm.
apartments in Florida,
Yeah.
also, Texas, Arizona, that list kind of goes on, and they're in trouble right now because the problem
Mhm.
with those areas is it's very easy to build, it's cheap to build, and there's endless land. So
Mhm.
it's like, okay, yeah, it's less expensive, but you have a problem with when there's oversupply. And our market functions very much like, certain parts of California without all the restrictions of California, where there's a lot of people, there's a very strong economy, a lot of people that live here and
Mhm.
want to live here, and just not enough places to live, not enough apartment buildings. Our government, for whatever reason, is making it even harder to build. Developers are just going other places, they're like, we can get stuff done in a fraction of the time, and without all of the costs if we go to Texas and some of these other places. So it's just,
Mhm.
and there's also just no land. So not only do we have high rents because it is what it is when there's not enough places to live,
Yeah.
there's
Supply
not
and demand. Yeah.
supply and demand. So
Yeah.
that's kind of the whole thing. It's like, hey, there's not enough places to live here, and all our units are full, and the prices just keep going up and will continue to go up because unfortunately there's, not a lot of supply. I think it's the fewest permits that we've had for apartments and housing since 2018.
Oh God.
It's strange, to me because we're actually growing in terms of migration, and the economy here remains strong, but yeah, very difficult place to build. So we get some organic appreciation with our apartments, but our thesis is not really dependent on that. We look for mismanaged buildings that need some
Mhm.
improvements. Often someone's owned them for a really long time. They don't really care about maximizing profits. They might or might
Right.
not take good care of their tenants. The buildings need some love. They need some operational help. So we're looking for those, say, $4 to $15 million buildings that are not interesting to institutions that have to deploy a lot of money, and they're also generally too big for an individual person to take on.
Continue. Yeah. Hmm.
Yeah, that sweet spot. So there's, and that's another reason that blue states are can be good because there's a little less competition. There's a lot of external people that don't know how to manage here. People from Texas and Florida tend to
Um,
get freaked out, those operators, rightfully so, are like, I don't know the ins and outs of that, so I don't want,
right.
you kind of reduce the competition a little bit because of some of the headlines that make it seem way harder to manage here than it actually is.
When you're out looking for that prospective apartment that you would like to, or apartment complex that you would like to bring into your portfolio, and I think, what was the name of it? Not Veritas, but it was something else.
Veritas, yeah, Veritas Equity Partners.
Veritas.
Yeah.
Gosh, I said that wrong, but it was assets in under management.
Yeah.
Okay, assets under management. You have over 400 units. And so how long did that take to develop? And then where do you see yourself again? Because 2026 economy, I don't know what's happening here in my area in Pensacola. I've had the best B&B, the best everything in my whole 30 years of real estate, and I don't know why. Um, Although we have been talking about how people are making more money in the stock market and they're pulling it out to make investments more in the real estate market, because you had mentioned that. And because that's what I've had cash sales that usually don't happen that much here, but at 1.4, 720, I go, where's this money coming from? And they have said it is more of their stock that they're trying to get some assets, because then we could show from a typical investor buys a condo on the beach and say, okay, during our summer right now, we can pull 150 to $200,000 off of a $1.4 million property. Well, they're happy. And but from your perspective, and you're seeing, what about your inventory? Like you said, find how much is out there. How do you find those targets?
Yep. So I would say brokers use us kind of as bait, if you will, for those off-market deals. We are now
Hmm.
big enough and buying frequently enough where we're getting, first a look at whatever is either coming to market or is not going to hit the market, but the brokers know of a seller who's serious
Hmm.
about exiting their property for whatever reason. So I would say it's mostly through broker relationships, of which we've been buying for 15 years. So some of these relationships go way back. But I think once you hit a certain volume, of course, it's getting a lot more interesting to them to try to get us good deals. So we don't as much do like, cold calling owners or things like that. We've found it's a waste of time. There's a lot of tire kickers. It's worth utilizing brokers, I think, for that piece. And once they know that we're very good at underwriting, they
What
can't
you do, right?
they can't trick us, right? So they actually bring us good deals, where it's like in our buy box is very narrow. So we just say to them, we're only interested in this. So we don't, but we underwrite, many deals a week. And that's another thing that I think people don't realize is you're not looking for a needle in a haystack when you're underwriting to a realistic 15% IRR. We're trying to get people, 6 to 9% cash flow. It's tax free. It's not about home runs, right? It's about consistent doubles that perform. And Washington has a lot of these smaller buildings. I think it's different than some other regions because we have
Probably so,
yeah,
yeah.
it's interesting. We had a more of an institutional partner that focused in the Southeast, and they said, yeah, it's odd how many of these, 20 to 100 unit buildings you have in most other regions. It's less common. You have a lot of big buildings. We have a ton
Big
of,
lots. Yeah,
yeah.
lots of apartments, you talk 200 to 400 that are spread out all over the place, and then closer to the university, or things, something like that. What would you like to tell us that, and how you got into this, and for other ladies too that may be interested in some type of pursuing this avenue, or I know you had an interesting how you got together with your partner in business, but What would you say to somebody who may have an interest in what you're doing?
Yeah, I think it's an incredibly interesting field. First of all, I will say helping people with their money is a really important, it's a really important thing, and it weighs on you, or it should, trying to, I don't really lose sleep over my own properties. I'm like, if they don't perform and I don't get the best return, or if I lost, I would much rather lose my own money but once you start taking other people's money, it is a big responsibility. But it is concerning how many people come to me. You were kind of hitting on this, but like older people that have these massive stock portfolios, but wealth and have paid wealth managers millions of dollars, and they're like, I don't know what to do with my retirement because now I'm just dwindling down a stock account. It's a bad tax strategy. And what if I live to be 105? And it's like, it's concerning, So I think that real estate should be a part of more people's portfolio. And then I think that most people should hire someone to manage and run that. Unless you have a lot of time, we have a ton of
Yeah.
clients that have tried the Airbnb and they've tried the single family house, and they're like, forget
Right.
it. I like real estate. I understand the tax benefits. I think it's a good asset class, but I don't have the time or the knowledge to do this. And I think that's a really smart place for people to be. It's like, hey, go work your day job, do your thing. And same way as you would have someone maybe manage your stock portfolio, have someone manage your real estate, but it's a big responsibility. And I would like to see more women in, let's say,
Mhm.
wealth management, asset management in general. I think the figure is as low as like 6% of asset
Right.
managers are women.
Yeah.
Super small.
Yeah.
Super,
Well,
super.
I know. And it's interesting too in the real estate profession. And it's good for you're going to get paid the same whether you're a man or a woman. Okay. You negotiate your compensation, but still 2% or 3% or whatever, it's going to be the same for anybody. The interesting part is that a lot of the I'm a broker, so I own my own real estate company and property management, but I'm one of the fewer women that actually owns the business part of it. Lots of ladies are realtors and they're excellent realtors. I mean, and they're, it's just, I think it's in our personality, because we work with families. The biggest investment most people are ever going to make is a home. And so that personality kind of drive, I think, and I'm an older individual doing it. So I know even the younger folks that are coming in are the guys seem to be, and it's not all of them, not at all, very number crunching kind of stuff, and not maybe as much as, okay, well, how's the family doing, and I'm gonna, we're gonna have a party and have the grandkids over, and that kind of thing. I still see that happening a lot in the real estate profession. Now yours is pretty dominant in numbers then, as far as making those numbers work for your clients then, correct?
You mean in terms of like the investment? Yeah.
Yes.
Yeah,
Yeah.
it's a very, I would say about real estate though, one thing I like about this particular asset class, because I'm not an expert in anything else, whether it's stock or crypto or oil and gas. I don't, you know,
Yeah.
I try to know the super high level so I can talk to people intelligently, but obviously I'm deep in one thing. But that was one of the things that drew me to real estate initially was, coming from cloud and tech without being an engineer. I kind of always was trying to sell something that was I didn't fully understand, which was frustrating. I was like, I can't explain the ins and outs of cloud computing and therefore to sell it really effectively, although I was very successful, and the most cloud sales reps will tell you that they don't understand it. They bring in
Yeah.
the solutions architects for that. So that was not just me, but I could never get over my imposter syndrome. And I was like, I want to do something that I can actually be the expert. I want to be the solutions architect. And with real estate, the numbers are not that complicated. I'm like,
Yeah.
it's just, it's like rents are currently here. When we
Right.
do a renovation and we add a washer and dryer, they're going to be here. And then the NOI is going to be here. And then the building is worth this, give or take. But it's not rocket science. And I really loved that, where I was like, I think that selling this is fairly easy because people understand it. It's not this obscure crypto that goes up and down that you don't, it's just not complicated. And it's a real thing, and you're providing housing to
Right.
real people that need
People.
it, and you can go knock on it and see it. And that for me was very refreshing because I was like, okay, I've spent a long time selling things that are, that I can't see and touch and feel. And
Yeah.
I like
Yeah.
I like that this is a beautiful home for someone. I like that it makes my investors money. It's kind of a feel good all the way around. And it's fairly simple to understand, even for me who's not I would say too for women, like you don't need to have a master's in finance. You're not working on Wall Street. It's digestible and important work, and I think women sometimes tend to I now try to associate with female wealth managers and asset managers, and I do sense that a lot of them really care about their clients and their work. Not to say that men don't,
No.
but there's a lot of like, I know my clients and I want to truly do right by them. And it's not all about what makes me the most money or,
Right.
I'm talking to wealth managers that will refer business to me and they don't get compensated on that. Most managers won't, push
Mhm.
you towards real estate because they want your
Of
money
course.
in the stock
Yeah.
market, and I'm like,
Right.
okay, it's a beautiful thing when you find a wealth manager, and some of our best referral sources and are wealth managers. And they're like, it's not about me getting paid, it's about doing the right thing for my client.
Well, because of that, and with ladies that are interested in this, how can we get in touch with you? Where do we start? What's the
Yeah.
email? Tell us how to get in touch with you.
Yep. You can email me for sure at Lauren@veritasequitypartners.com. I'm also pretty active on LinkedIn. So anyone's welcome to send me a DM on LinkedIn, and we can start there.
Do you, as a business, though, have a website as far as people to go to also?
Most definitely, yeah. Veritasequitypartners.com. And we have a form there. You can check out our portfolio, more about our thesis. And of course, I'm happy to share our deal room with anyone as well. That's you can't access off of the website, but we're always raising. So if anyone wants to take a look at the underwriting and dive more into it, by all means, hit me up and I will share more details.
Okay. What would be, you don't, do you have anything where the individual that you're looking for has to have so much money to come to you to even talk to you about things?
We did just raise our minimum to 100K. Um,
Oh, wow. Okay.
yeah, it is flexible. I mean, it's up to our discretion. We've had some people say, I feel more comfortable with a different number, and we're open to that. I would say, generally with this type of investment, it's mostly because it's illiquid that we want people who are comfortable saying this amount of money is, I never want to put someone in a bad
Okay.
position.
Yeah.
It's
Right.
you can't access it. In certain circumstances, I
Right.
could get it back at a discount, right? But it's like, I don't ever want to. I've had clients come and say, this is my last 70K.
Yeah.
I'm like, nope. Like, you
Yeah.
got to do
Yeah.
something else because, if you need everyone I think should have a rainy day fund. And so, yeah, I would say a 50 to 100K if you want to test us out. Those are good starting numbers. We did just raise it, but like I said, it's more of a conversation of like if someone if Seattle's foreign to them, we're foreign to them. But yeah, it has to be money that you're okay
Right.
putting away for a while.
Not having access for a while.
Yeah.
Yeah. And so when, where do most of your investor folks come from? From your area, or do you have them in all different places around the United States or even international?
I wish we had more, but mostly our area. I would say I think there is something about, and this is okay. I mean, real estate is hyper local. I don't like when
Mhm.
people talk about real estate super general, like, oh, real
Yeah.
estate's crashing. It's like, no,
Right.
the Sun
No.
Belt is struggling. Real estate is not crashing. These sweeping generalizations. I do think people like to invest in an area where they can see their property. And people who live around here, they just get it. They're like, yeah, there's nowhere to live. We have all these small buildings. It just makes sense to them because so we don't have to go through that kind of initial explaining.
Education and how to, what our area is all about and something like that.
Yeah, and we also don't pursue people very heavily in other areas, at least right
Right.
now. It would only be through like these podcasts or someone
Right.
hearing
Hmm.
about me and saying, "Hey, actually, I am interested in Seattle and my aunt lives there." And so we do have that. We have people from Texas, Arizona, California, a few people on the East Coast, but I would say probably
So
70%, I would guess, Washington.
our area. Yeah.
And that's also because of referrals. Like
Right.
organically, obviously, our
Right.
investors will say, hey, meet my friend, and just kind of works out that way. But we would like to expand more. I think we'll probably, we've started running ads, meta ads has been effective for us, and we will probably look at, California because they understand. They're like, they get the thesis,
Yeah.
but their
Right.
state's a little bit, a lot of them are not
Interesting.
very happy with, they don't
Yeah.
want to
Interesting.
there. So,
Yeah. Yeah.
yeah. So we're like, hey, that's probably a good demographic for us. But I would say the majority of our people are definitely Washingtonians.
Do you have a specific age group more that you see as far as bringing or making that decision finally to go in that route for that asset class, let's say?
I would say that the majority are over 45. I would
Mhm.
love to have more young people, and we do have a few chiropractor, attorney, dentists, new doctors, like
Mhm.
30 years old, and I think that's awesome. I would love to see more young people because you really get that power of appreciation with
Right.
the 1031s. And like that's what my business
Yeah.
partner did. He started when he was 21 and ended up, millionaire by
Right.
33, just flip
By doing,
compounding
yeah.
properties, right?
Right.
So it's a
Right.
really cool thing. But I think the reality of our economy and society
Yeah.
right now is like young people, unfortunately, the majority of them just don't have the resources to do something like
Right.
this.
Well, I mean, yeah, I tell people like when I spent a lot of time going to school to to become a professor. And so, but when I started investing in the early 90s, buying the initial properties and things and seeing you could never do what I did back then, but that accumulation and keeping those properties and using them and it's but someone here in our community couldn't even afford in their 30s right now our houses, which are only $300,000. I mean, they're comparable. So everything is local, except for the beach houses and things like that. But they're still everyone around here. If we have a house that's in 250, it's gone. Because our income levels aren't that high. And so when you do get a professional person that's coming in, the funny thing is I've talked to so many doctors and lawyers and everything, and they're good at their profession. They're terrible with their money. And I'm sure you found that too. And when you start talking to them, there was a big event. I talked to a bunch of folks this past weekend when I was out at the beach and about real estate. And they were in their 30s and they were just, that makes so much sense, but we don't know how we could do it right now you
Mhm.
know I said, well, I started when I was in my 30s too, but the prices were only $60,000, so it makes a big difference. What would be for a person that is under 40, what would be, what's the word I want to use, your presentation to them as far as we know the longevity and everything like that? What would be something you would relate to them? Maybe a gal that is a professor or a physical therapist or someone that comes along and not professor, we don't make that much money, doctor or a lawyer or something like that. What would be the first kind of things or tidbits you might want to give them?
I think, I think recognizing one, what you said, you're an expert in this, and find people that you trust to
Right.
come alongside you that are experts in with investing. Number one, I think it's very wise and smart to be a doctor and just be able to say, that's not my wheelhouse. I do
Right.
this. And no one does everything well. And I think it's not reasonable unless you're a professional investor to expect
Mm.
yourself to be able to. There's very few people that can do that on the side. Like that was what drew me to Alex, is I was like, this is a unicorn you're working 60 hours a week at Amazon. I know that job. I do that job. It's very intense. And you're doing this. Well, that's unusual, and I don't think most people should try or would want to even do that. So find an expert that you trust. It doesn't have to be me, but figure
Mhm.
out, hey, I got this person who can help me with my real estate side of my portfolio. And then I do think, save and get yourself started early is important. I do wish there were more people that were financially, savvy and disciplined, because even if you start with us and we had someone use 25K from their IRA, a young person, and it's like, hey, over time, that's going to be really impactful. But if you let us work your money until you're 60, and you need
Mhm.
it could be a big part of your retirement. So I would encourage people to look at getting into something. We also have a couple people that are not financially disciplined and did
Yeah.
pick us because of that, which I thought was quite what made me a little nervous, but was quite wise. And they have said it's been great for me because unfortunately I just can't get to it, and I get to everything else and spend it.
Right.
It's
Well,
kind of
I know, and then
yeah.
right now it is an issue for that person who did have some money and now maybe the gas is up. I can't believe how expensive gas is, or just living expenses. So now they're what they used to have in their expendable income is not there anymore. And so, are you finding clients that are coming to you? I know you say they're mainly referrals and things like that, that they are just basically saying, I've got to do something, like you said earlier, with my stock portfolio. What's happening here? Because you went through that. So you have that experience, right?
Mhm.
So, are you finding more people that way with your referrals or coming into you and you go, let's go this way, this avenue with you, blah, 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 blah.
Yeah, I am finding more high net worth people that are older that are looking at
Hmm.
retirement and are
Right.
saying, how do I start exiting some of my
Right.
stock portfolio? Unfortunately, that's another thing I'd like to say to young people, like, hey, figure this out earlier so you don't end up in this position where you're getting hit with all these taxes.
All the
Just
tax.
start compounding in two different areas young so you have some cash flow, when you're older. But yes, we are having more clients come to us and say, we need money to live off of. And so that, tax-free cash flow is becoming very enticing to them. And quite frankly, a lot of them are super successful, wealthy people. It's interesting that they just didn't even know that something like this existed. And now they're in this position where they're like, we've got to kind of horse trade things around.
I found that too. It's like they've got this money, and then sometimes, man, some of the wealthy people, what? Why would you like? I've got a gentleman who has 30 vacant houses right now that could be rented, but he doesn't want to make any major repairs. I said, not major. Some of them do need, but others don't. But he just says it's okay. I pay the taxes. Just let him. I go, are you crazy? So I've been trying to get him to realize a few things, but he just doesn't see it. I don't know. His wife about killed him the other couple weeks ago. I guess I said I had an offer for 10 of his properties at 1.4 million. Got 10 of them off the books, and he turned it down because he wanted stupid price, like 2 million, which they weren't worth that much. And she goes, you did what? So I think they had a discussion on that situation because he just called me. He goes, I need to get rid of some of this. I said, I told you. So we're going around and around. But it's interesting that because the way he got the property he's a lawyer, and the way he got the property was with tax deeds. So he maybe
Mm,
spent $1,000 for the house,
wow.
and so he got a house. And so he just thinks that, well, his value of the house, so people can do it that way now. Well, no, that's not the way it's working now, and he's a lawyer, which drives me nuts, you know.
Yeah, I mean, well, I'll say this. There's a lot of money out there. There's
Yeah.
plenty of money
That's
for all of us investment managers. Quite frankly, there's a lot of people that just don't know what they're doing, or they don't care, or, it's a lot of different reasons. But yeah, the more I talk to people, the more shocking it is. And I'm like, I'm not worried about raising money. It's a lot of people need help with this, and there's a lot of money, particularly in my area. I mean, that is another reason
yeah.
that we stayed here, is we were like, there's a lot of there's a lot of successful people in tech that want to focus on tech and they get the basics of real estate, but they want to find someone to manage that. With other, we've got doctors and lawyers and all of that, but people who have money to invest, in a lot of people that I'm like, you need help. Yeah.
I know, just telling them that. I've learned a lot. I want to thank you for coming on. Everybody, thank you so much for watching us today. And again, Lauren Rogers, she'll be the expert there. If you're inspired by these powerful women in real estate, you'll want to catch the next conversation. Click the video on screen to keep sipping, selling, and leveling up your game.